Assalamualaikum everyone. Today I'm excited to introduce you to Takaful, an Islamic insurance system rooted in the principle of mutual assistance and cooperation. Firstly, Takaful comes from the Arabic word kafala, which means guaranteeing one another. At its core, Takaful is about participants coming together to support each other in times of need. It is a system designed to align with Islamic values, emphasizing fairness, solidarity, and mutual aid. Let's take a deeper look at Takaful. Firstly, Takaful is an Islamic insurance based on mutual assistance. What makes Takaful unique is its communal approach. Unlike conventional insurance, where the focus is on profits of the insurer, Takaful is built on the idea of shared responsibility. Participants contribute to a collective pool with the understanding that they are not just protecting themselves but also helping others. This creates a sense of unity and cooperation among members. Second is contribution pool into a collective fund. In Takaful, participant contribution, often called tabaru, are pooled into a common fund. When a member experiences a loss, such as damage to property or unexpected financial hardship, the fund is used to cover the claim. This ensures that the financial burden is shared among the group, reflecting the Islamic principle of supporting one another in times of difficulty. Third is Takaful operate without interest or excessive uncertainty. Takaful also stand out because it avoids elements prohibited in Islam such as riba, gharar, and masir. Instead, it focuses on ethical investment and risk sharing. This makes Takaful a Sharia compliance alternative to conventional insurance, ensuring that the financial activities are not only fair but also spiritually fulfilling. Let's move to how the Takaful system works. Firstly, the participant contribution, where everyone pays a small amount into a share fund. Second is participant account. The fund is used to pay claims for participant in needs. This is reserved for emergencies, cover insurance called Takaful. Third is investment profit. The money in the fund is invested in Sharia compliant ways. Any profit earned is added back to the fund. Fourth is surplus or deficit. Surplus means extra money is returned to the participant or saved for future needs, while deficit is the fund. If the fund runs out, the company gives an interest-free loan, Qard Hasan, to cover it. Lastly is shareholders fund. This fund is used to manage operating costs and staff claims processing.
The next one will be the key features of Takaful versus insurance. Takaful and insurance are both financial products designed to provide protection against unforeseen events, but they operate on different principles. Hence, I'll be presenting about the key features of this one. I will be presenting on the Takaful side first, which is then insurance. So for Takaful companies, they focus on the first one, which is based on Sharia principles. So, Takaful is an Islamic financial product that complies with Islamic law, which is Sharia. It prohibits practices like interest, riba, gambling, masir, and uncertainty, which is gharar. Second one is mutual cooperation, which Takaful operates on the principle of mutual cooperation, which is ta'awun, where participants contribute to a common fund to share risks and rewards. The third one will be no profit motive. Takaful operators do not aim to make profit from the fund. They charge fee for managing the fund and providing service. And the last one is investment restrictions. Takaful investments are restricted to Sharia compliant assets such as stocks, bonds, and real estate. While on the other side, I will be moving on to the insurance sides. So insurance companies is based on risk transfer, which is conventional insurance operate on the principles of risk transfer, where the policyholders transfer the risk of loss to the insurance company in exchange for a premium. Insurance company also is a profit motive. They have more flexibility in investing premiums, including in non-Sharia compliant assets. And the last one will be no mutual cooperation. Policyholders do not share in the profit or losses to the insurance company.
However, the preference for Takaful isn't without challenges. Non-Muslim participants may face barriers like limited understanding of the concept or cultural misconceptions. Education and awareness campaigns are crucial in overcoming these obstacles. One significant barrier is the limited understanding among non-Muslims. Many non-Muslim communities are unfamiliar with the principles of Takaful. Terms such as Sharia compliant might be perceived as exclusively religious, which can deter interest. To address this, companies must clarify that Takaful's ethical values align with universal financial principles like fairness and mutual benefit. Another challenge stems from cultural misconceptions. Some individuals may associate Takaful strictly with Islam, leading to the perception that it's not accessible or relevant to non-Muslims. Overcoming this requires highlighting Takaful's inclusivity and its appeal to global ethical standards. Lastly, there is a need for education and awareness campaigns. Educational initiatives can address misconceptions and build trust. Workshops, seminars, and digital content explaining how Takaful operates and its benefits for diverse populations are essential. Collaboration with non-religious organizations could also help expand reach.
Preference among non-Muslim communities. Which one they prefer? Is it conventional insurance or is it Takaful? So let me share some reasons why non-Muslim communities prefer conventional insurance. First, familiarity and understanding. It is because a lot of non-Muslim familiar and used to with conventional insurance, and since they know how it works, they feel safe choosing it over something new like Takaful. Next, lack of awareness about Takaful. Many non-Muslims aren't aware of what Takaful is or how it can benefit them. They might think it's only for Muslims, which isn't true. Because they don't have enough information about Takaful, they often ignore it as an option. Second point, perceived complexity of Takaful. Some people find Takaful products confusing because they use terms and ideas that are different from what they use in conventional insurance. This can make them feel overwhelmed or unsure about choosing Takaful. Since conventional insurance is usually simpler to understand, many people prefer it because they know exactly what they're getting into. Third point, market dominance. Significant market presence. Conventional insurance is everywhere and has a strong presence in the market. This makes it easy for non-Muslims to find traditional insurance options that meet their needs without having to search hard. When there are so many choices available in conventional insurance, it's natural for people to stick with what's familiar. And the last point, regulatory familiarity. Conventional insurance systems are usually well regulated, which means there are clear rules in place to protect consumers. Non-Muslims might feel more secure knowing that this regulation exists for traditional insurance products. In contrast, they may not feel as confident about Takaful because they aren't as familiar with its regulatory framework. Next, why some non-Muslim communities prefer Takaful. First, ethical investment. Many people see Takaful as a more ethical and socially responsible choice compared to conventional insurance. This is because Takaful avoids investing in industries that are considered harmful like gambling, alcohol, and others. For non-Muslims who care about where their money feature of Takaful is another reason some non-Muslims prefer it. In Takaful, participants contribute to a common fund that provides mutual benefits, creating a sense of community and support among members. Non-Muslims who value community-oriented solutions might find this aspect of Takaful particularly attractive because it aligns with their desire for financial products that emphasize helping each other rather than just making profits. Fourth, transparency. Many people feel that Takaful is more transparent than conventional insurance. This transparency helps build trust among potential and Muslim customers because they get clear information about how their contributions are managed and what happens to their money. Knowing exactly where their money goes and how it benefits the community can make non-Muslims feel more secure in choosing Takaful over traditional insurance options.
The purpose of this study is to identify the level of acceptance towards Takaful insurance products among non-Muslims in Malaysia. Also, the study wants to identify the most important element that influence non-Muslims' choice to accept Takaful insurance. So these are the factors influencing preferences towards acceptance level. First is awareness, attitude, service quality, and relative advantage. For hypothesis 1, there is a significant relationship between awareness and the acceptance level of Takaful insurance products. For hypothesis 2, there is a significant relationship between attitude and the acceptance level of Takaful insurance products. For hypothesis 3, there is a significant relationship between service quality and the acceptance level of Takaful insurance products. For hypothesis 4, there is a significant relationship between relative advantage and the acceptance level of Takaful insurance products. For conclusion, after conducting multiple regression analysis, the acceptance level of Takaful insurance products are strongly affected by attitude and the relative advantage, which are hypothesis 2 and hypothesis 4, while hypothesis 1 and hypothesis 3 are rejected in the study because it is not significant.